Good afternoon, everybody. My name is Chris Bailey. Welcome to the first UK Investor webinar. We're delighted you could join us. With me today, I've got Nigel Wray, renowned investor, early stage investor in big names such as Domino's Pizza, Saracen Rugby Club, a myriad of other investments. Nigel and I are going to talk about markets and everything else you could think about. Delighted to make this totally interactive. We'd love to get your questions. So there is a capability to ask questions as you go along. If you hear something you want to hear more about, or you want to ask us something more, please feel free to do so. Use the Q&A functionality at the bottom of the screen, and we'll try to get your questions before the end of the webinar, which should last about 1 hour. So welcome, everybody. Thank you again for joining us. Nigel, good afternoon.
Oh, yeah.
How are you surviving the coronavirus pandemic?
I think we'd all agree it's really eerie times. I mean, I wake up like everybody else. I wake up in the morning and I think, is this really happening? Is this really happening? And but we're incredibly lucky. When I say one mustn't complain, actually, I think it's a human condition to complain. We all complain, but we've got a really nice garden and live in with most lovely walks around us. So I think what this whole experience does, and I think I'm being airy-fairy here, is it actually makes one look at one's surroundings, the trees, the gardens, the this, the that, and the other. And I think a lot of people disagree with me, saying no, we'll go back to the same beforehand. I don't think we will actually. I think we're going to be. I'm the wrong generation. But I think things are definitely moving in the way of the environment, in the way of we want to know where our foods come from and our animals being treated decently. I find it strange to find myself saying this because obviously I was brought up in an era when green and stuff like that hadn't been invented. But I'm certain the world is moving very strongly in that direction. I think that's a good thing.
Yeah, this is what investors have to do. We have to move with the times. So let's bring it back to the markets. Nigel, you and I between us have too many decades worth of experience in investment markets. Is the current backdrop, is it the strangest you've ever seen? Or actually, have you seen areas and times which are even more differentiated and different than what we're seeing at the moment?
No, I think for all of us, this is the strangest time we've ever seen. I believe in that. Obviously, I was a young man then in 1968, 69, 80,000 people died of Hong Kong flu, I think it was. Well, I can't even remember that. Nothing was closed down in the economy at all. This time, for right reasons, I don't know. The world has closed down, which obviously, and it didn't just close down gradually. I mean, we discussed earlier that we've all seen recessions and demand drops, but it doesn't drop to zero overnight. That was the difference here. Destroying so many good people who've built up good businesses over many years, small people, small businesses, ruined overnight. Hopefully to come back.
Yeah, and this to me is the big difference that, as you say, in a normal recession, you have a period of time where demand slows down, there's an adjustment period. This has happened almost overnight. So as an investor, as a market watcher, how do you deal with this? Because clearly we not only have falling share prices and everything else, but as you say, good companies are suddenly having problems. They're short of cash. They need the banks or shareholders' help. From an investment perspective, how do you deal with this? How have you been talking to some of your companies that you invest in about these issues?
Well, we can obviously go on to online and delivery, which are obviously two massive winners, which I think be permanent winners. Because we might go backwards a bit, but we won't go backwards very much. Online is here to stay and get massive and bigger. It obviously puts huge pressure on the high street retail and the high street. And I think what we're going to see as we come out of this, touch wood, we are coming out of it. I think we're going to see the companies that have got real resilience. Their businesses will come out of it. I mean, I saw the other day, only a small little sort of quarry company said that we were at 60% in April, but we're at 98% in May. So actually, it's businesses like that where I think you want to, they're the ones that are going to lead the way out of it. And of course, and some of them, through no fault of their own, won't. Because, you know, I mean, social distancing, I mean, we all know that, you know, that social distancing, well, how do you open a small school that had 100 pupils and they were all, you know, tightly compressed, if you like, being little kids, and you've now got to have 50? Well, how does that work? You know, how can the school survive? You know, let alone pubs, restaurants, etc., etc. You know, we've all, I guess, looked at this and discussed it, you know, in the lockdown many times over.
So does the coronavirus, does the pandemic, does it make large swathes of the market, of investment opportunities out there, does it make them irrelevant? Or does it mean that you just have to change your game? You have to add extra filters to your investment approach to ensure that certain areas are still investable for you?
Well, I've 20 or 30 years, you know, pursued a very long-term policy that, you know, once I'm in, I'm in. And I happen to think that if you look at the great fortunes of the world, it's actually made by people who stay with their company for 30 or 40 years. Warren Buffett, Jeff Bezos, etc. And because one of the reasons is actually is compound interest, which we all turn our nose up at. But if you permanently, you know, have a good company and sell it, and then go into another one and sell it, firstly, are you that bright that you can discover that many good companies? And B, let's just use 30% tax for simplicity. You pay 30% tax. That means your £100 becomes 70. Well, for the 70 to get back to 100 is 42%. Well, how do you do that? How do you do that? Whereas if you compound on the tax you haven't paid, you know, you're accelerating at quite a rate. And I often do the calculation on my own house and everybody's houses, and I think if you look at it, you've probably made 5 or 6% per annum over the last 30 or 40 years, you know, but it's net on houses. It's net.
Yes.
Obviously, if it was dividends, then obviously you've made half that or whatever it is. But there's a temptation to turn our noses up at smaller numbers. But if the FTSE today is roughly what it was in 1999, and if the great majority of the major property companies, and property is a really good investment, isn't it? Mm-hmm. Well, if they're all at about a 20-year low, can't be that good an investment, then can it? Mm-hmm. You know, so to me, it's. I mean, by and large, and there's some staggering figures that the Wall Street Journal produced, and that they took a period of 70 years in the American stock market, 70 years to 2015 or 16, and it's something like, let me try and get this right. You know, 30% of the companies produce virtually all the gains, but the staggering figure was 50% of the companies have lost money in over 70 years, and 1% of the companies produce 75% of the gains. Yeah. And obviously, and I think we're seeing that more again today. That, you know, the indices, which aren't too bad, yeah, but they're being seduced by Apple, Amazon, Tesla, etc., Microsoft, etc., because what we are seeing today, we're seeing companies that are as big as states. I mean, I think that well, I think, you know, you quoted it, and one of the things is that if the entire UK FTSE index is capitalized at 1.8 trillion, well, Apple's catching it up because they're 1.3 trillion. So Microsoft, I think, has the most cash any company has in the world, which is, you know, which is a mere 100. They've got a scratch bar on a mere 147 billion, and I think Apple's got 100 billion, and poor old Facebook is really poor with 70 billion. Well, these are numbers that we've never seen before in our lives, because you know, I mean, whilst I've been looking at companies, it's been in billions, but in the States now, it's mean, companies you've never heard of are capitalized at 20 billion, 30 billion. And you know, so something is going on. And I suspect that it's that these companies are getting so big that they can never be caught, because their investment power and their research R&D money they've got. And if somebody does come along who invents something useful, they simply buy it, because an acquisition for $1 billion or $2 billion,
yes,
which for you and I is, and I presume everybody else on the phone call, is unbelievable money, is drop in the ocean for these guys. It's an amazing period.
But doesn't that mean, Nigel, that these tech companies, these tech behemoths, they shouldn't be actually the core of your portfolios today, because the capability for them to double again, is that even possible? Surely that means that as an active investor, you've got much better opportunities elsewhere in the market cap spectrum, rather than just concentrating like everybody else on these companies. What do you think?
Well, I mean, speaking as somebody who's got it solidly wrong, because I remember a few years back, thank God I didn't say it too publicly, but you know, thinking Apple at 300 million, well, really 300 million, I mean, that's miles too high. They can't hold that. Well, they're now 1.3 billion. You know, so what do I know? I mean, I couldn't do it. I mean, I couldn't invest in companies like that, because as you said, I mean, I'm a huge believer that it's easier to double, you know, from something the size of a pea than something the size of an elephant. But that's been wrong. I mean, but I suspect if you look, and I'm not a tech follower particularly, but if you look at tech companies generally, I mean, our eyes are drawn to Amazon, Apple, et cetera, but I suspect there's 1,001 others that didn't make it that we're not aware of. I mean, which of course is why you have to have a reasonable spread in your portfolio, because I've always remembered, well, I'm going back many years, but you know, but saying to people, oh, you should never ever, you know, be without this company. It can't go wrong, and it went bust, needless to say. So
it's like the old expression: you can't go wrong buying IBM or Big Blue. But look at IBM shares over the last decade or 2 decades, been very dull. So things change. That's what history and investment tells us. Let's go back and think about today's world with the coronavirus, with the pandemic lockdown backdrop. What extra filters have you put into your investment appraisal and processes? Is it much more balance sheet work? Is it speaking with people, understanding whether managers of a company really understand that the world is a little bit different? What else have you been doing?
Well, I think it's always about people. I mean, you know, the fish always stinks from the head. So if you get that wrong, it doesn't self-correct on the way down. Everything's about good people, you know. And if you read, as I've had time in lockdown to read lots of books about Bezos and all these guys, but the one thing that comes through in all of their companies is the most important thing is, if you like, is culture. You know, people, I mean, good people who believe in the company, believe in where they're going, care for each other, and then the rest follows. I think companies where it's all about, let's make as much money as we can today, they won't make it. They won't make it. And the other thing, as you probably know, that for me is a given, is the guys running it must have skin in the game. Because, you know, ultimately people only care about their own money. I know that's a tough thing to say, but they do. And which always frightens me when the state gets more and more, because you know, the state is spending someone else's money. That's just too easy, someone else's money. And we all do it in our own way. I mean, you know, so I think first thing I want to know is have you got real skin in the game? Now that's a relative term. If you're just starting off and you haven't got any money, then, you know, some money, something. And then the other thing is passion. You know, you need people with real passion. You know, they really do believe in what they're doing. They've got a vision of where they're going, and you'll never get that in a massive corporation. I think, oddly enough, I think the Googles and the Apples are sort of rewriting things. But if you look at look at, as it was, British Gas, which is now Centrica, and I think they're down 90% from their high. Well, what a surprise! Ex-nationalised industry. Does anybody really care? Is anybody fired up with passion? Now, I think you're fired up with passion when it's yours, and yours doesn't mean 100%. It means having a jolly good holding in the business, and it's long term, and you really believe, and you look after people because people count.
So if you met let's say a retailer, which was run by a couple of people, they did have skin in the game. They own 30% of the shares. They seemed fired up. They want to invent the world. The trouble is they're in retail, and retail's tough. What would you think?
Yeah, it depends when. It depends. It is interesting because retail is obviously tough. I don't know if you'd call, and I don't follow them closely, but I don't know if you'd call Boohoo a retailer. But what a brilliant success that's been. Now, I don't particularly like fashion companies because I don't really get it. I don't really get how you're going to come up with the right fashion year after year after year. I mean, how do we know if skirts are going to be leather or khaki or pin skirt, whatever you call it? How do I know? So I have to. I think a high street, probably wrong here. The high street is obviously avoided because, I mean, online will surely destroy or has destroyed the high street or lots of it, because why do you want to schlep off to the shops to carry home lots of heavy food or wine or whatever it is when somebody can deliver it for you and you simply order online? So I think that would change the world forever. It'd be interesting to see what happens to. I personally don't think people can work from home all the time. I can obviously see that. I spend 3 hours commuting every damn day. So I think there will be. I think once we can all work out, there'll be a lot more home working. But I don't think it can replace going to the office, because I think going to the office is a social experience, and we're social animals.
Yes. So your advice to investors would be: think about the management, the drivers of the business. Think about the big themes, whether this company is actually going to make a potential success of things given the backdrop, and ultimately listen to what they say, and obviously judge people and companies ultimately by their actions. I mean, in the end, it is about not just having a great idea, but also executing on it in terms of the numbers, cash flow generation, and the like.
I think it's unavoidable. You've got to have some basic knowledge of what a balance sheet looks like, what a PE ratio is, what a dividend yield is. I don't think it's particularly complex language. But to me, the most basic thing of all is don't listen to what people say, listen to what they do. Now, so if somebody's telling you he's got an absolutely marvelous company and he's raising X, then the obvious question to ask him is, that's wonderful. How much are you putting in? Because that's the acid point, isn't it? And if it's, well, I've got lots of intellectual capital in, well, sorry, that's not an answer. I mean, to me, you've got to get I think if you get somebody, there's no guarantees in life, but people who've got a lot of skin in the game, they are going to be working on your side because they want a healthy share price and a good investment. I think if you've got, a track record isn't everything, but it's something. So if there's a bit of a track record for people, then that's a big, big plus, a big plus. And then obviously, I mean, it's got to make sense. So obviously, if this was easy, we'd all be doing it. And as I've said, I mean, clearly investment is not easy because the index is roughly what it was 20 years ago.
Yes.
It's actually, you add dividends, it's had a 2.6% per annum compound return. But then you've got to pay tax on those dividends. So that'll take you down to about 2%. And then if you've had your money managed, that'll take off. So either way, it's not good. It's not good. And, but, you know, within, and I was fortunate enough, you know, to be in Domino's, which was and still is a marvelous business. And I still believe to this day that you've got to have a big winner. You know, something's got to pay for your duffers.
Yes. Yes.
And in my view, you will only have a big winner with patience. You know, you can't, it's not 1 year, it's not 2 years, it's many years. I mean, I was in Domino's for 17 years. You need that sort of length of time because no one's that clever. You know, I mean, you know, you could have bought at the end of 2019, you could have bought and you'd have been slaughtered. But if you think, look, I think it's a decent business. I know it still looks a good value to me. You know, I really like the guys running it. I think they're really committed, etc., etc. Then you just got to ride it out because I don't think anybody's that clever.
Yeah. So here we are talking in sort of on the 10th of June. The market's had a strong bounce. As you say, it's still down year to date from a UK perspective. Other global markets, the States, some of those markets are now up on the year. If we think about just the markets first, what's your outlook for the rest of the year? Do you anticipate another crash? Or actually,
you know, I really don't think. The answer, I don't know. I don't know. I mean, obviously, clearly, we all talk about, is there going to be a second wave? Don't ask me to comment on that. You know, I'm not a medical expert, though I do notice that all the experts disagree as well. So who knows? But I just think that if you're asking people to comment on what the market's going to do tomorrow or for the next few months, who knows? Who knows? But I believe that if you've got a good, obviously you've got to find a good company, good people, just stay there. And timing is, well, who knows? Because particularly with smaller companies, we've all seen it. You know, I mean, I've been in companies where nothing happens for 5 years. You know, you think, good Lord, and then it doubles in the next 5 weeks or something. You know, something like that. And that. Why? Who knows? But you've got to be patient, and obviously you've obviously got to get, well, you've got to get 6 out of 10 right, and then hopefully have one real winner that will give you a decent return.
I always think the key is to stay engaged with the company, and you know, in today's world, you know, there are a myriad of ways you can stay in touch with companies. There's almost too much information out there, but using some of the newfangled techniques of video conferencing and everything else, you know, the opportunities to speak or listen to management, to hear the results being presented, to fire over your questions, they're better actually than I get any other time in history. Accessibility, the information revolution, actually helped small investors. It hasn't, in my opinion, hindered them.
I think, to be fair, though, it's quite, I mean, the institutions, no problem, because they can speak to the management. I think it's quite difficult for a small investor, you know, to phone up the CEO of a company and to get through. I think that's quite difficult. I mean, the arrival of Zoom is obviously going to change the world dramatically, because, I mean, for someone like me, I think, well, gosh, why do I have to go down to Bristol for a meeting? When I, you know, that'll take the whole day, when I can just do it by Zoom, which isn't as good as face-to-face, because I think every now and then you need to be face-to-face, because that's that body language thing that is I think is so important. But nonetheless, Zoom's pretty damn good, and I would guess that more, you know, annual meetings will be on Zoom, because one of the great tragedies of the AGM is that they're all held during the week at times when the average investor can't get there because he's at work. So, whereas if you can get to the AGM, that'll, in a physical world as opposed to a virtual world, that does give you an opportunity to speak to the directors, ask them how things are going, and actually just get a feel from their body language and how they conduct themselves. I mean, but again, the ultimate feel, and I keep coming back to this, I know I sound like a crap record, but the ultimate feel is, if the company's that marvelous, how much money have you got in it?
That's right. And what I like about the information revolution, though, is that, I remember the time when I started out, it was difficult to get hold of information, to have to send off for it. There wasn't this fangled internet thing where you can access data. Now we have too much. The interpretation becomes the key rather than the information per se. But I do believe, and I strongly believe, that small investors should be putting in a little bit of time, asking the questions to the companies they invest in, listening to the results, trying to work out, as you say, the body language if they can't get to meet them at an AGM or an analyst sort of open house or something like that. That's what we should all do. Investment is not easy, but it becomes, your batting average gets better when you go through these routines. And that's what I like about the information revolution. It does open up that angle for small investors and, of course, big ones as well, who notoriously are lazy, lurking at their offices, taking the fees, I guess.
No, I absolutely agree. And I think, actually, I mean, nothing's for nothing. So if you want to be a good investor, you've got to put some work in and find out. And I think it's the Netflix book. I think it's that where when he was starting off, he would write to sort of, a few really important people, saying, "Can I come and see you?" Or "Can you do this, that, and the other?" Every single one of those really important people replied. And I thought there's a lesson there, isn't it? That's actually from the small investor's point of view, yeah, write to the CEO, or obviously sensibly and all that sort of stuff. If anybody's that important that they don't reply, that's telling you something, isn't it? Because if really, really important people reply, then it's and less important people reply. You're running a company over here because they think they're marvelous. That's telling you something. In fact, it's telling you it's a lousy investment, in my view, because that sort of behaviour. It's not just that, but if that's your attitude, that will affect the culture of the whole company.
That's it. Yeah, I'm a great believer that you can pick up just in those little small interactions, something you observe, how somebody reacts to something. It tells you the best small companies, they act like much bigger than they actually are in terms of their investor relations, their accounting treatment and everything else. They want to make that step, and often they're building the business, as you say, culturally in order to do that. I think it's a very good thing. And this is what I like about today's investment world for the small investor. They have access to all of these sorts of things. As I say, the key now becomes interpretation, not just the acquisition of information per se.
Yeah, I mean, obviously we all talk about the data economy, and it's all about data, which has obviously a big brother implication for all of us, in that Big Brother will very soon know exactly where you are, exactly what you bought, and that's a good thing and a rather bad thing at the same time. But I think it still comes down. I think, firstly, within reason, you've got to follow your own instinct. Never neglect your own instinct. I don't necessarily know what instinct is. You might describe instinct as being the wired-in knowledge that you've picked up through your entire life. But by and large, don't go against it. And clearly, meeting people, albeit virtually, is hugely important, because it's interesting, because every now and then you know, I meet someone and something rankles. And actually, you know, then I'm sort of, you know, criticized by, you know, making my mind up too quickly and all that sort of thing. But I generally find that if I think like that, quite a few people do. You know, and actually, so I think that having a good feel about somebody, the reverse, of course, is that if you're going to be a good con man and commit fraud, you've got to be very plausible and nice.
Yeah.
Because if you're a nasty shit, you know, you won't get away with it. But if you've got a nice line of chat, I mean, God, the guy in the States who was head of the NASDAQ and New York Lock Club and all that stuff. Yeah. I mean, he conned everybody for decades, didn't he? Now, presumably he was, but to me, he struck me as being an insufferable snob. So I don't think it particularly appealed to me. But clearly he appealed to a hell of a lot of people, you know, because, you know, and that's a risk. But again, the risk is dramatically lessened if the person's got huge amounts of capital invested in the company. Because then, yes, it's possible that, well, firstly, to realize his gain, he's got to sell his shares, right? So in my view, the moment the guy who's running the company sells the majority of his shares, sell yours too. If that's the right decision for him, it's probably the right decision for you.
Yeah. And what about sizing? Because, of course, one way where you can also help protect yourself is even if you absolutely love something, people seem committed, they've got skin in the game, the theme is good and everything looks great, cash flow is coming out, etc. There has to be a bit of prudence somewhere. What would you suggest for the average investor out there? How many stocks should they be holding? What's the most they should be having in one position?
That's a really, really interesting point. I don't think there's any point in being spread all over the place, because then if you've got 100 stocks, for example, I think that's ridiculous. But I mean, I tend to work on, I mean, not for me, because I tend to break all my own rules, as you'd expect. But for other people, I work on, you probably shouldn't have more than 4 or 5% in any one stock. Because then if you make a muddle of the whole damn thing, okay, you've lost 4%. But I mean, 4% is handleable. I mean, gosh, how much did we all lose in the first, you know, in February and March or whenever it was of this year? A lot more, probably 24% or more. And that's really interesting, actually, because I've got that sort of mind. You know, whenever I see a company reporting, even if I don't know it, you know, I look and see what the share price performance has been, and it is staggering how many companies are down 70%, 70% from their high, and it's so the index is not faithful. It's not giving you the true picture, and I keep coming back to the fact that I don't think there's much point investing in the stock market. I mean, there's certain guys. I mean, Terry Smith seems to have a very good track record at Fundsmith. But generally speaking, I don't think there's point in the market. I think there's a huge point investing in certain stocks. I'll be clear, you know, and that's what you've got to get right. Because the reverse is also true. Whilst the index has done not a lot for 20 years, I mean, within that, there's been some stunning performances by companies who obviously have got it right, because clearly somebody's going to get it right. And again, I always think that what I'm saying is very vague, but I think it's necessarily vague, because if you seriously pretended that you knew how it was all done, A, I think you're an idiot, and B, well then why haven't you coined all the money in the world? You know, which is why I don't really, you know, listen to people, you know, who work for the IMF or anything like that, because I'm not aware they get much right. And well, if you were that good at it, why would you work for the IMF? I mean, surely you'd be doing it yourself.
It's like anything. Investment is an art and science as well. It's a bit of both. You need a little bit of discipline. You need to understand numbers and trends and stuff like that. But it's also about people and psychology and timing and many other myriad of factors. What about selling, though, Nigel?
Yeah, it's very difficult. I'm a very, very bad seller. And actually, I don't want to sell. The truth is, because, you know, when I go into something, firstly, I like to have a decent holding, a decent minority holding, which probably means I can't sell anyway because it's illiquid. And I enjoy the journey. I enjoy the relationships with people, and hopefully I like and respect the people, trust them. Trust, hugely important word. But I think you've got to enjoy it.
Yeah.
And for me, I mean, if it's complete misery and it worries you, why do it? I mean, we're all down here once, yeah. And presumably it's got something to do with being happy. So be happy, you know. So which means you've got to. We all have setbacks, of course. I mean, the sun doesn't come out every day, but you know, you've got to have. You actually got to have. If you want the guys running your companies to have real skin in the game and real passion about what they're doing, then you've got to have a bit of that too.
As I say to people, the stock market is the best soap opera out there. It seems to me there's wonderful stories, great camaraderie, sometimes massive success, and sometimes sadly massive failure as well. But such is life. Well, what about multi-assets, Nigel? Because we've talked about equities. Is there any value in the average private investor out there having serious investments in bonds and cash, apart from a bit of cash to tide them over difficult times, you know, serious pension fund investments in those areas, or would you not bother?
Well, I think that obviously to have some cash is always important, as we've seen in the last few months, you know, because liquidity dried up. Cash, of course, at the moment we're almost paying people to take cash off us, aren't we? So it doesn't sound particularly like a long-term philosophy. I mean, similarly with bond yields, I mean, what are they? 0.1% or whatever they are. I think from an investment point of view, you know, the mini bonds and the scandals there's been in mini bonds, I don't follow them closely, but if somebody offers you 9%, there's a reason.
Yes.
If the major banks will offer you 0.1% or whatever it is, and somebody else will offer you 9%, there has to be a reason, because you're only offering 9% because you have to attract the money, which means there must be a considerable degree of risk there. And I think people always need to remember that as the interest rate goes up, so does the risk factor. You know, you just have to accept that. Yeah, and don't get caught by it.
We're back down to investment as a common sense sort of concept, in the sense that if you're being offered a big rate of interest, there has to be much greater risk. So,
absolutely, absolutely. It's as simple as that, and also by and large, you know, whether it's land in Bulgaria, it's a mini bond where the guys use the money to invest in their own assets. It normally smells. It normally smells. Not always, because, you know, you can't write everything off, but I would say it normally smells.
So property as an asset class, is it dead? Should people just focus on their residential house, or will there still be opportunities to have involvement there?
Well, I think residential property, which is obviously, again, if you bought residential property just after the financial crash, you know, I suspect you've done okay. But by and large, if you bought property before that, it's been not bad, but not brilliant. But that said, I am a believer in residential property, particularly today when mortgages cost you nothing. So yes, I mean, I think that's to have a, and one mustn't forget that a house is not just an asset; it's where you live. You know, it's a thing that's going to. I would describe the house as the most inanimate object there is, because it's got a real feel to it. Hopefully it's a happy place for people. So that's the most important thing. Commercial property, gosh, well, at the moment it's up in the air, isn't it? Because for two reasons. One is how many people are going to commute, and two is how do you socially distance? We don't know how long social distance is going to last, but how do you socially distance in an office that's one floor with lots of people and one entrance? I mean, jolly difficult. And then, I mean, the most basic thing of all, what happens to the toilet? I know we don't really discuss that, but wow. You know, how do you go there, and the door handles, and how many people could, you know, the most basic thing in the world becomes jolly difficult. So I think that, yeah, I mean, if I was guessing, yeah, well, I think property's like everything else. You know, there will be some bargains there, but as a generic class, I think it looks difficult at the moment. But that doesn't mean to say there aren't some gems in there.
It's how I feel generally about investment today. You've got to be opportunistic, you've got to be activist, and certainly active. You know, I think the era of passive investments, that being the great driver and source of wealth, is over. The 2020s is a time when, as an individual investor, you can add value. You can make those good selections which will allow your wealth to go up and you to outperform stock markets. In that sense, it's a bit more of a throwback to what we saw in the 70s and 80s and 90s.
Yeah, I think. Well, as you know, I also don't believe that the private investor can, as a general rule, can actually hop into something and then. It always irritates the hell out of me when I walk past Bloomberg or whatever the program is on television, and they're sort of saying, well, they're constantly saying to somebody, well, what do you think we should be in now, or what do you think we should invest in till the summer, or, and you think, well, that's not investment. You know, investment. I thought they were called shares because you're sharing in something. Whereas at the moment, I mean, the average holding period for a share is so low that actually the concept of investment and creating a really good business, it employs people, creates wealth, etc., is almost disappeared out the window, which to me is actually crazy, because if you want capitalism to survive, then most people have got to think it's fair. Now, is it fair that chief executive salaries have gone up X-fold in the last 10 years and their workers' salaries have gone up hardly at all? I think we'd all say, no, that's not right. That's not right. Particularly as those chief executives haven't done a good job anyway, because the index is the same as it was 20 years ago. So they haven't even made anybody any money. So to me, there is a lot wrong with capitalism, which is still the greatest system, in my opinion. But there's things wrong with it, because you know, the general takes his troops up the hill with them. He doesn't leave them abandoned at the bottom.
Yes.
And again, I think that's part of investment. I mean, you know, the person who creates that caring culture, and not caring in the sense that it's like a bloody holiday camp, but caring in the sense that people really believe in their company and where it's going, and attack their work with passion. He and she are the guys you want. And I think they will be proprietors. They won't be people with no money in the game.
Yeah, it's back to culture again, once again. And as an individual investor, you can judge that by interacting with a company, hearing what they say and do.
Yeah, and I think you said it before, and the answer is, you know, well, never give up. if you want to get hold of somebody, as illustrated by the guy who wrote to important people, you can. And I know, and maybe, obviously it's difficult because, as I've said, even when we get back to AGMs, and they're all at the wrong time for people to go there. So that's difficult. And obviously Zoom, I don't know how many people you could have on a Zoom call so that the AGM didn't last for 7 hours as everybody was asking the CEO questions. But certainly that must be a possibility. And I keep coming back to this, that everything in life is about good people. You'll accomplish nothing if you haven't got good people.
Yeah.
And the best way to judge people, I think, in investment terms, is ask questions about their company. What do people think of their company? Does the runner of the business actually have a real stake in the business? I keep coming back. That's hugely important. And then, if you possibly can, what do you think of the bloke? What do you think of the girl? Do you think she's bloody good, or don't you? I mean, I'm fortunate in that I can meet people and people come and see me, and and obviously by definition, where we invest, we think it's terrific. By definition, you can't be right all the time, so you're going to get a few wrong. But I always think, I'm always a fan of the person running the business, and of course, but one of the reasons I'm a fan is because of their commitment to the business, both financial and spiritual, if you like, and passion. They must have passion. You can't be indifferent about what you're doing. It can't just be a job, otherwise that doesn't work. And then it's amazing what people can do. Amazing.
Let's, in the remaining time, Nigel, let's ask a few questions that have come in. Brexit, is Brexit a big worry? Do you worry about it for UK companies? Is it going to hang over them for the next year or so? Hard Brexit and all of that chat. What do you think?
I think we've got to get it done. Because I mean, the sad thing about Brexit is just as we finished Brexit and things were really, coming up in January, whenever it was, and then we get Corona. So you've had 2 wallops and back down we go again. I think, for better or for worse, let's get it done. And and at the end of the day, I'm a huge believer that this country, we have some really talented entrepreneurial people. The world is moving much more entrepreneurial because you just need one of these things, a laptop to run a business now. It's not like the old days, if you like, when you had to have a factory and big machinery and all that sort of stuff. So and I find that the young people today have more energy and passion and are more inventive than I've ever seen in my life. So I think that we've got to be capable of, surviving on our own and getting on with it. I mean, if you look at the success, I know it's a smaller country, 10 million people, but you look at the success of Singapore or places like that, it can be done. It can be done. I think this country's, I think one of the problems for this country is we actually, which I guess inevitably happens in an older economy, but I think almost 60% of the population of the Northeast, Ireland and Wales, are employed by the government. And as somebody once said, if you rob Peter to pay Paul, you can always count on Paul's vote. And I think that's a danger, because I'm always quoting other people because I don't have any quotes myself, but one day I might. But somebody said the other day, I think it was Luke Johnson, actually, to be fair to him, said every single company in the world that's ever been at one stage was started by an entrepreneur. And that's why entrepreneurs are so important. And I think that's a sort of, I think that spirit we do have in this country.
That's right. We've got to encourage it. I think there's no alternative.
No alternative.
Thinking about the UK and the world, another question came in saying, well, UK is only a small part of the world index, not even 10% nowadays. Should we be looking to invest overseas? And if so, where should we be doing it?
Gosh, I mean, if investing in your own country is difficult, investing in someone else's country is even more difficult. Obviously, you can invest in funds, etc., which I would guess is probably the only way to play the Far East or you want to do. But God, I think really difficult. But again, I'm very Anglo-centric, just because I vaguely understand this country, and I wouldn't give myself a chance if I was wandering around in New York, because there's people a lot better than me out there. So I would then go, if I was doing it, I'd go to somebody with a really good track record as a fund manager. I mean, and because there's guys who do have really good track records. Track record is not a guarantee of the future, but it's about as good as it gets.
My observation would be that actually the UK market inherently is very international. I mean, if you look at the source of our earnings in FTSE 350, it's 70% outside of the UK. So I think you're lucky. Investing in UK shares can give you that international exposure as well, if that's what you're looking for. That would be my observation. So we're quite fortunate here. We're an open economy, very international because of history and reality, let's face it. That's how it is. And another question, let's get on to personalities and stocks. Warren Buffett and Berkshire Hathaway. You still fan, Nigel? Do you think Warren can bounce back from his... it's not even a failure, is it? He's a raging success for many, many decades. But, Berkshire Hathaway as a company has been a bit sideways recently. It's in the shadow of the tech giants. Is Warren ultimately going to be right? And would you still back him?
Well, he as he says himself, he takes a very long-term view. I think he seems to have been 88 forever, so maybe maybe he's still 88. And Charlie Munger, I absolutely love, is to have number two as a real youngster of 95 or 96 is just amazing, isn't it? Just amazing. But it's not sort of business. It interests me as a sort of somebody who likes companies and investment, but I would never invest in it because it's just it's so damn big. I think, again, I'm not an expert, but I think his return for the last 10 years has not been particularly good, has it, Berkshire Hathaway? But he would say, yeah, but that often happens. I remember him saying in an interview that on 3 occasions in his sort of 40 years or whatever it is, Berkshire Hathaway shares have halved, in the market. And if you'd sold then you'd have missed out on hundreds of percent. Yeah. And so I just think he's a really interesting bloke, has great lines, some of the greatest lines you hear. But I wouldn't invest in Berkshire Hathaway today. For a start, not wanting to be terribly morbid about it, but to step into his shoes and Charlie Munger's shoes, tough act.
Yeah, it is. My observation would be their big investments are in areas such as reinvestment, the reinsurance industry, the railroad industry. It's a different sort of beast. And my guess is the accounting there is very, very conservative. So I think my view is, as a counterpoint to sort of the Apples and the Amazons of this world, it has some worth. We'll see. A few other ones have come in. Sasanda, are you still an investor in Sasanda?
Yeah, I am. I like the two ladies there. They've been in the business for 20 years or more. Obviously, they were hammered by the cliff edge that we all fell off. I've forgotten when it was now. I can't remember whether it was February or March, but
unfortunately, yeah.
I mean, they're still doing pretty damn well, and they're obviously now focusing much more online, which they have to, and different. I mean, to hear me commenting on fashion, I mean, I might as well not bother. What do I know about it? But no, I like them. I think that they've got skin in the game. I think they're good people, and I think it's a nice little company. Mm. Do I think it'll knock the lights out? Probably not, but I think it's a decent business.
And we've got another question in about Gfinity in the esports area. What are your views there? That still looks like a big long-term growth theme to me.
Well, it does. I mean, esports, as we all know, is massive. And I think I remember dramatically more people watched the sort of esports final than the 40 million people who watched the European Cup final in football or something like that. I mean, many times. And you think, really? But it is definitely happening. And I mean, Gfinity's, obviously I'm a shareholder, and it has been a constant disappointment, really. But you sort of think, but someone's got to make it in esports, because esports is so massive. It is extraordinary. I suspect you and I bet you don't play esports.
No, I've seen it online, but I've never participated. No,
it's a foreign language to me. But these guys who play esports are real stars now. They're on big, if not soccer type money, certainly a lot more than rugby type money, and it's an amazing area. I mean, how you monetize from it as an investor, I'm not quite certain, actually, because the people who have made fortunes out of it are the games, Frontier and Activision and all that sort of stuff. By coming up with their names, I'm sort of pretending I know something about them. I don't. I just know the names. But the people who actually make the games have just been unbelievable. But again, right or wrong, I wouldn't invest in them, because I don't. I regard them slightly like fashion. So you've got to come up with a new game that's going to be as good as Call of Duty or whatever it was. I mean, well, maybe you can, maybe you can't. But I would also have thought the same about Netflix. That, well, really, I mean, how can you keep coming up with absolute sellout shows, every time? But once again, I've been wrong.
Yeah. But for me, it's all about the power of distribution. That's probably true for Netflix, but probably also true for esports, which is why maybe something like a Tencent out in Hong Kong, China, may be better positioned. Who knows?
Well, they're massive. I mean, Tencent, as you know, are absolutely massive.
Yeah.
Esports is massive. Not quite certain how you invest in it.
No, that's the conclusion I came to. It's a tough one. We've got 3 minutes and 3 questions, Nigel. So we'll do a rapid fire round. Future of hydrogen. What do you think?
I missed that. Sorry.
The future of hydrogen. Hydrogen as an investment theme. Is it good, bad? What do you think?
No idea. Sorry.
Fair enough. Cruise ship. Is the cruise ship industry, is it done and dusted, or can they bounce back?
Oh, I think it will definitely bounce back, but it's not going to happen in the short term. I mean, my reading of things is the sort of people who go on cruise ships. I'm not exactly a kid myself, but the sort of people who go on cruise ships are going to want to see some evidence. They're going to let other people do it first to make sure it's okay. Yeah. I'm very hopeful that in the autumn, some form of crowds will come back for cruise ships, sporting events, whatever. But none of us know at the moment. It's one of the great ironies, of course, is that the greatest non-social distancing crowd we've ever seen was in the demonstrations in London and Bristol, which I thought was quite interesting.
Indeed. Final quick question: China and the US
Ooh,
sort of world trade?
whoa.
Is that a big theme? Is that something that can impact everything? What do you think?
It's very interesting, China, because right or wrong, I don't think anybody trusts China, but the reality is, can you do without them? I mean, they're so big on the global economy. I actually read today, not the US, but China and India, that the Ganges supplies a huge proportion of India's water, and the source of the Ganges is in Chinese-controlled Tibet. So if ever, and I think China generally is short on water per head relative to the rest of us. So you could get quite het up about that one if you wanted to start worrying, because they're not the best of friends, China and India. Because they are one of the great ironies is, I think in 1800, the two biggest economies in the world were China and India, because of the Silk Trade and all that sort of stuff. And by 2040, they'll be the two biggest economies in the world because they've got so many people. So that's fascinating. But China is, I mean, it's so big, and it has, without doubt, it had. And the other great thing about China, I think it was it the French ambassador who said to his Chinese counterpart, "Well, what do you think of the French Revolution?"
Yeah.
And the Chinese counterpart said, "Well, I don't know, because it's too early to tell."
Yeah.
So what the French Revolution was 200 years ago, was it? I can't remember.
Just over, yeah.
And you think, but that gives you an example of how the Chinese think. To their great credit, they really do think long term. And one of the great tragedies of democracy, of course, is with an election every 4 years, we don't think long term. So we don't think, strategically about technology, about should be nuclear power or whatever it is, and take a 25 or 30-year view, because you can't. Democracy, it's tough.
Yeah, for what it's worth, my view on China and the States would be the critical date this year is going to be November, because I think the choice of who's going to be the next US president is going to massively influence that. And no doubt, if it's the current incumbent, then watch for the fireworks on that front over the next 4 years. But we shall.
I tell you what I do think, to finish off, which is, as we are in England, I think there's going to be a strong tendency for people to buy British, to buy British, British food, British products. And I saw Macron in France encourage the French to buy French, keep employment in France. And I think that's going to be a strong trend. We're going to start much more buying our own stuff, which I think, obviously that'd be very positive for the economy.
Absolutely. A good patriotic way to end things. But thank you so much for being on this webinar. I'd like to thank Nigel Wray very much. I'd like to thank everyone who's listening, who's dialed into the webinar, the first UK investor webinar that we've held. Thank you very much. I'd like to have a big shout out to all of those people behind the scenes who've helped make this happen. It's been a real pleasure to work with you all. And finally, I'd like to wish you all best of health. Stay healthy and wealthy, or hopefully wealthier. And we'll speak to you again very soon. Thank you very much.
Thank you very much, everybody. Lots and lots of luck.
Bye-bye.
Take care.